Where does your bank stand on net zero commitments and principles for responsible banking?
Back in 2019, CIB has been a founding signatory of the Principles for Responsible Banking, and that was precisely 10 years after the financial crisis, where banks realized it's time to revise banking. And why did we do this? Because, as I mentioned earlier, CIB saw sustainable finance as early as 2015, and saw the business case of sustainable finance, and we realized we need to have an operational framework that guides bank how to do it. I mean, if you realize the business case, this is easier said than done. The principles for responsible banking are relevant in two ways. Conceptually, they redefine the raison d'etre of banks, our role. So our function evolved from being just funding to being funding with sensitivity to the environmental, social, and governance dimensions. And that's a leapfrog. Sustainable finance nominally appeared in the mid-1990s, but ever since it was just a concept. It didn't find its way towards practical implementation because banks didn't need it. I mean, they were growing and they're making profit. It sounds good, but it was not compelling. I think after the financial crisis, where the G dimension was violated and caused the biggest crisis ever since the Great Depression, banks realized that it's time to evolve. So conceptually, Principles for Responsible Banking in 2019 did that. But not only that, Principles for Responsible Banking provide the operational know-how, how to do it. Now that you know that you have to become sustainable finance, how to do it. I think I've been reflecting on these principles. We have 6 principles. I think it's the first one is alignment, impact, customers, stakeholders, governance, and the last is transparency and accountability. The first 4 signify the bank's capacity to address its stakeholders. Alignment is very important. Alignment means that the bank is strategically vivid, is agile, because when you align with SDGs, your national inclinations, industry trends, this means that you are not static. Yeah, I mean, you do not see your role as the same as it was 10 years ago. Because if you managed to make profit 10 years ago, it does not guarantee that your know-how is good enough to sustain your growth. So alignment, for one, means that you are very much aware of you have this compass, this ongoing radar to spot opportunities and to avoid threats. It's very important for banks to sustain growth. I think a major loophole with the Principles for Responsible Banking is its title, because banks, and the same goes to the net zero commitment, it drives the message that it is a responsibility. Well, actually, it is a business mandate. It's a business case. Aligning with strategies with the SDGs means that you are alive as an institution. The second principle that I would like to focus on, for the sake of time, I'm not going to go through the 6 principles, but the impact principle, the second principle, which is the impact assessment, is extremely important for banks, whereby we delve into our portfolio, whether lending or investment portfolio, to identify the positive impact that we have to increase and to identify the negative impacts to mitigate or to decrease. And this is a very healthy exercise. It might look that because we care about the environment, definitely we do and we should. But why should we? It's because we want to purify our portfolio. Having a very good understanding of your impact actually is a risk management technique, because when you know that you have in your portfolio fossil fuels or polluting industries, you are liable as a bank to experience default on part of these clients, because there is transition risk, there is, I would say, litigation risk that could derail the capacity of our clients to pay back. So it's very much connected. When you say the impact of our portfolio is to purify our portfolio and to make sure we are managing our risk and generating revenue, tapping into new sectors, the future sectors under energy efficiency, renewable energy. As we all know, the SDGs funding gap creates a market of $7 trillion. This is room for bank to grow. So we can go on. In a nutshell, the Principles for Responsible Banking is an operational framework to help us understand our new raison d'etre and how to do it. Moving to the Net-Zero Banking Alliance, again, we are a founding signatory of the Net-Zero Banking Alliance in April 2021. And at that time, I mean, people say, why would you? I mean, it's not mandatory. Again, it's the business case of the Net Zero Banking Alliance. And it's not a commitment in a sense that it is a national commitment and we have to reach the net zero by 2050 and the interim reporting by 2030. No, it's an exercise to make sure that your portfolio is in sync with new trends, that you are decarbonizing your portfolio. Again, it's the same logic, because if you decarbonize your portfolio, you're doing two things. You are tapping into growing sectors that promise huge potential, like the energy efficiency, renewable, green building, green transportation. But at the same time, you're limiting your exposure to customers or sectors that are dying. I mean, they are dying. We don't want to be there. But again, being in the Net Zero Banking Alliance or the Principles for Responsible Banking or having a robust environmental social risk management system do not mean that we turn down clients, unless we did delisted industries. You know, the IFC performance standard delisted industries like arms, human trafficking, we do not get there. And it was never part of the bank's portfolio. And I think that's the case with most banks. However, these frameworks helped us have a mechanism to steer our portfolio into a healthier, more tuned to risk management and revenue generation. It's an iterative exercise. We're joining hands. I'm representing Africa on the Net Zero Banking Alliance, the steering committee. So far, there's only National Commercial Bank, Kenya Commercial Bank and CIB in Africa. And we hope it's not about national commitments. It's about the business case for these banks. The Principles for Responsible Banking, actually, I represent the MENA region on the banking board, and there is room for MENA banks to grow. Chargill Fab is already on board. The 5 largest private sector banks, which constitute around 80% of the asset size in the Egyptian banking sector, are there. But there is room for MENA banks to join frameworks like the Principles for Responsible Banking. And these frameworks are important to show you how to make the shift towards sustainable finance, because it's not an easy target, but it's not difficult. But it has to have its governance structure inside the banks, the commitments of the bank. I mean, it's a very interesting exercise and experience for CIB, and we're having this advocacy role, whether under the PRB, the Net Zero Banking Alliance, or even the TCFD. We joined it here also for task to manage climate risk. We were in COP26 and we were advocating climate adaptation for MENA and Africa. It's a very interesting exercise, and I really appreciate having Qatar, Fab, I mean, prominent banks to push it through the MENA region and Africa prior to COP27, hopefully.
Let's see what Fab has to say about it, all right?
Thank you. No, I couldn't agree more than what Dr. Dalia is saying. It's so extremely important that these frameworks are used actively. FEB joined the Net Zero Banking Alliance end of last year, back in October 21. Extremely important for us as a leading bank in the country and in the region to support on this extremely important initiative. And by joining the alliance, it gives you, as Dr. Dalia said, it gives you some frameworks, it gives you a structure how to address this. But also importantly, let's just remember that it gives you a lot of opportunities to to support your clients in making this transition, and it supports you in making this transition. How do you change yourself as a bank in order to address your clients' future needs? There will be sectors who will be used less in the future. There will be new sectors will be required. There will be new clients will be required. So it's not only about reducing exposure, it's actually about looking into the opportunities decarbonization will create for the future. There are so many opportunities, their need for so much capital for the future, and the banks have a vital role to play into this game. So I fully agree. We need more banks to join this, not only regionally or locally, but also internationally. It is so important that we as financial institutions who have touch points with so many different levels, whether it is with the public sector or it is with our clients or it is with others who require this. And let's also remember that in order to be a bank of choice, an organization of choice for the future, you need to look into what kind of organization you want to be into the future. And if you look at our key stakeholders, day to day are focusing on sustainability. Whether it is your investors, we've seen that the requirements from investors is much more ESG focused assets. When we look at from our clients' perspective, clients internationally are now willing to pay a higher price for sustainable products. When we look at our employees, we've seen that the latest Generation Z, Generation X, they're looking to work for organizations who have very clear visions on sustainability. And finally, regulators. We have seen regulators locally, regionally, and internationally pay much more focus on sustainability of the risk side of it, but also from opportunity side of it. And they want the banks to play an important role. So all the stakeholders want to have enhanced focus on sustainability. We as organizations, we as the financial services need to take that ownership into support on the net zero commitments or commitments from principle for responsible banking, because that is what is required for us. Here we have a set of governance, we have a set of framework which shows you how to drive towards decarbonization, how to take more responsibility, and that is what we need to do as a financial sector.
All right, thank you. Anyone else on this subject?
Maybe I would like to add to what Charlotte mentioned about the maturity of the regulatory scene in MENA region. Actually, in the Emirates, in Saudi Arabia, in Jordan, Morocco, Egypt, we are witnessing very progressive regulations on part of central banks and federations. For example, the Central Bank of Egypt issued in July 2021 a very comprehensive and progressive sustainable finance framework guidelines that addressed risk, product development, internal capacity building, having sustainability governance in place in banks, and also mentioned frameworks like the Principles for Responsible Banking and the TCFD, the GRI. So the regulatory scene is very conducive to this shift. And this would encourage banks and financial institutions to follow suit. So we are on the runway.